Wasabi wallet. Unfairly private.
What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we jump in, of course, shout out to sponsors of the show, Ledn.io. This is where you can use your Bitcoin for a few different services, some of which include a Bitcoin savings account where you can stack more sats on top of your sats, so you get an interest rate of 3.6%. Currently, you can get Bitcoin-backed loans where you use your Bitcoin as collateral to secure a Canadian or US dollar loan, or you can use their B2X service now, which actually allows you to double your exposure to Bitcoin, essentially using your Bitcoin to obtain a loan of equal amount in Bitcoin. So essentially you're doubling your exposure to Bitcoin. So if you want to check out any of those services, you can click the link down below. And actually, if you opt to get a loan, they'll credit your account with an additional $50 worth of Bitcoin. So go ahead, check that out. Let me know what you think. And besides that, if you are into Bitcoin, then privacy is quite important. And one of the things you can do to help with that, hit up NordVPN. So I use this on my phone, on my computer, and basically what it does is it hides your IP address, it encrypts your browsing data, and it has a few other added benefits like unlocking geoblock content. So if you want to check that out, click the link down below. There's a special deal where you can get it for $3 a month. With that, let's dive into the news. Now, actually, before we dive in, I do want to say it's great to be back. I've been away on vacation for basically a couple weeks, two and a half weeks now. Had a great time, so I appreciate those of you that checked in on my interview videos while I was away. If you did not see them, go back, check them out. I had about 5 different interviews that dropped while I was gone. So anyways, let's dive in. So China has announced a new regulatory authority to certify digital payments and blockchain products. So we had the president of China the other day coming out saying he's in favor of blockchain, and that drew some hype. Well, not amongst Bitcoiners, but some other people were excited about that. Anyways, they've announced this body that will certify digital payments. And what does this mean? Well, it kind of seems like they're going to go through and give their stamp of approval to various different things when it comes to basically like point of sale, any sort of digital blockchain related payment type stuff. They go through this system. They're supposed to be certified every 3 years, it looks like, and they'll be able to say that, oh, hey, we're certified by this regulatory body in using this payment, but they cannot use it as like a marketing shtick for their payment processing. So they also say that they want a national digital currency to boost the digital payment industry, and they say that their own coin that they're going to be working on will feature offline transaction ability, which we'll talk about that later in another story. Yeah, they say that it'll compete even better than something like Alipay or WeChat Pay, which are both huge in China. Now, when I look at this story, I see this, given how China has acted in the past, I see this as a first step towards them just saying, this is China's digital coin. These are the acceptable payment methods, which they kind of already do. And if you don't have this stamp of approval, then you are out of the country. You're not able to operate here. It's just further centralization of authority when it comes to payments. And yeah, I kind of, some people are getting excited about this. I am not. If I was in China, this wouldn't be, to me, great news. Also, you have to think about stuff that they're doing in relation to like a social credit score already. So if you say something that is dissenting of the Chinese government, then your social credit score can drop down, and you could be prevented from paying in this case for services. You could be prevented from getting paid. They've already done things where they're experimenting with restricting travel or ability to use public transit, things like that. So yeah, this does not seem super great, especially when you're coming from an authoritarian government like China. Yeah, let's move on. Now, in relation to this, IBM expects a central bank to issue a digital currency within 5 years, which I don't think is very out of the question. Like we said, China is already looking at that currently, and you have the president coming out saying, oh yeah, blockchain is great, that blockchain, not Bitcoin narrative, saying that they'll take the reins and they'll do it themselves. So central bank digital currency, or CBDC, is kind of the abbreviation that we'll be referring to it. So couple notable quotes here. Central banks are responding to the reality that digital currencies, either privately or publicly issued, will soon be part of the global monetary system, and that it is in their interest to ensure they are neither left behind nor displaced. Now here's the thing. Bitcoin was created not because of the need for a digitized money, but because of irresponsibility of banking and central banks backing that irresponsible behavior. So simply digitizing a national currency is not going to make it really that much better than what we already had, especially in the context of why Bitcoin was created. So I'm very skeptical of CBDCs in general. Sure, it might expedite the speed of sending money around the world, but it's still going to have to be shoehorned into the existing regulatory framework, which allows some people to get around those regulations while others do not. And typically, banks get to do whatever they please, including laundering money for Mexican drug cartels and things of the like. And regular people are the ones that end up getting pinched by a lot of this. Now, what did I want to touch on? Here we go. Okay, so this is the interesting part here. So they say, while 73% of global banks have spoken in favor of CBDCs, as many as 82% of central bank respondents claimed that the greatest financial stability concern from CBDC use is the risk of digital bank operations at a higher speed than before. So they're actually worried about a quicker speed there. They don't really go into detail as to why. In addition, central banks believe CBDCs should be available offline and function wherever cash is used to date. And here's the issue with that. We touched on it in the last story. To have it available offline, you would have to have a way of verifying that the currency itself is legitimate. So in the case of Bitcoin, you can have something like this. So this is an open dime. If you are not familiar with open dimes, they're essentially like a bearer bond for Bitcoin. So I can put Bitcoin on a device like this, on a wallet located on it, but I can use it and hand it to an individual. They can check online how much is sitting on this device, and they can also know that I do not have access to the private keys that allow me to move money off of this device. So essentially the private keys are not accessible until you kind of break the device. You have to poke a pin through the hole, and that causes a red light to flash. Essentially, I'm able to hand somebody Bitcoin on a stick and have them not have to worry whether or not I'm going to steal that Bitcoin back from them later. Okay? Which you couldn't do with a hardware wallet, because I could have a backup of the seed phrase and wipe it later. So that's the point of an open dime. So that is kind of an example of unforgeable, basically bearer bonds, or unforgeable physical Bitcoin put into physical form. Now here's the issue. In order to properly check this, of course, I have to plug it into a computer which has internet access, and I need to check online that the Bitcoin exists in the wallet associated with this, and that is checked against also the rules of the network. If I'm using a block explorer, then I'm checking to see if those Bitcoins do exist and they are indeed legitimate, that it's not some sort of a forgery, that it's in line with the consensus rules. If you have an instance where you can transact entirely offline and you never go online to check if the money is there, then that, for me, pulls into question the legitimacy of the money I'm receiving. So if I can't check the network, I wouldn't accept a Bitcoin transaction from somebody. If they're okay with this kind of offline behavior and not checking for the legitimacy of the currency, it kind of beckons to the fact that these currencies can just be printed into oblivion anyways, which they don't seem to be particularly worried about. If we have extra inflation from counterfeit CBDCs, then no big deal. So that's what kind of worries me about this. Anyways, the report goes on to say that they expect it to not be kind of like a G20 nation that jumps on this bandwagon first and creates a CBDC, but rather probably a smaller, they say smaller and less complex economy to address a certain policy objective, such as driving resilience of national payment system or extending financial inclusion. So they think it'll probably be a smaller nation first that jumps on here, and then it kind of extrapolates out from there. I would probably agree with that. I think the more interesting thing, though, is not where the nation states opt to create digital currencies themselves, but in places like Venezuela, Argentina, other places around the world where the currency itself has been so devalued by the central bank of the land that people are forced into alternative currencies like Bitcoin. I think that's the driving factor here. And sure, we're going to see lots of CBDCs. We're going to see lots of fun things created by countries that think that digitization is the innovation here. But in the end, I don't think it will be. Let's move on. In Russia, a government official expects to mine 20% of the world's Bitcoin. Now, let's put this in context here. Of course, that's impossible because more than there's not 20% of the Bitcoin left. In fact, we just passed the 18 million mark recently in the past week and a half, 2 weeks. Anyways, there's only 3 million Bitcoin left to be mined ever. The 18 million have already been mined, so 3 million left. So it's a small percentage that are left out there. I think what they're referring to here is 20% of new Bitcoin being brought onto the market. So they plan to have 20% of the world's mining capacity or hash rate. So let's just kind of sum up what they... So a local financial news outlet, RBC, reported that a Russian mining company, Russian mining company, that's the name of it, RMC, plans to repurpose a metal factory in the country's northern province of Karelia. I'm not sure how to say that. So it was closed due to U.S. sanctions in 2018. It's now possible that it could soon host a Bitcoin mining farm so large that it would account for 1/5 of global output. So they say our idea consists of converting the factory and selling its computing power as a service. That is to say, offering IT services. So it would be more of like a cloud mining facility that they rent out. Now, I don't know how many of you have dived into cloud mining, but on its head, it's not super great when it comes to the consumer. For the people running the cloud mining, it's a fantastic deal because they essentially get paid to buy the mining equipment, which outside people rent, and then they mine Bitcoin and they pay out a portion of the revenue from the Bitcoin and then keep another portion for themselves as fees. So yeah, for the people running cloud mining, it's great. But as an investor, especially with how competitive mining is getting, not great. I wouldn't recommend cloud mining unless you're just doing it for shits and giggles. So yeah, they're looking to convert this factory and they just assume that they're going to get 20%. They don't really state why. here. They just kind of say that's what they're aiming to do. I would be very skeptical that they're going to get up this large. I mean, if they do, okay, but I'm very skeptical. It is getting so competitive, and we've just seen the further splintering and further decentralization of mining over the past number of years. When you look at the pie breakdown of hash rate amongst mining pools from 5 years ago, it was not very decentralized. In fact, ghash.io, I believe it was ghash.io a few years back, in I think 2014 or 2015, they did briefly get over 51% of the network. Now, when they did, people saw it as a problem, and given that mining pools are made up of individuals, people voluntarily moved to alternative mining pools to cut that down because they saw it as a net negative for the entire Bitcoin community. So keep that in mind. But I don't think that a random company is going to jump in and suddenly capture 20% of mining. I think they're going to try. They might get a decent chunk if they really do it well. But I think that they're going to be surprised how much more hash power comes onto the network very, very quickly, especially if we see a large bump in price in the next couple of years here. They're going to have their work cut out for them. Anyways, let's move on. Now, this story, I am not super excited. If I'm honest, I'm not super excited about this, but we'll have to see. Anyways, Jack Dorsey, typically seen as a bit of a Bitcoin maximalist. He's kind of shunned other crypto projects like Ethereum. He's a big proponent of the Lightning Network. Cash App, of course, supports Bitcoin payments and selling and all of that. Anyway, so Jack Dorsey has been kind of a big Bitcoin bull, and he's been kind of shitcoin averse. But he's just invested in a crypto ICO platform called Coinlist. And so what this is, it's a platform where people can run token sales. And they are SEC compliant, or at least trying to be. They did host the world's first security token ICO, and they're gunning towards accredited investors. Now, yeah, again, I'm not super excited about this. So he put they raised 10 million for the Coinlist funding round, and Jack Dorsey was a part of that. So here's his quote: "Crypto needs a trustworthy platform for launching new projects. Coinlist leads the industry in that role, and trading is a logical next steps. They want to create a trading platform for said tokens that are launched." So let's break this down a little bit. Number one, when it comes to having actual securities, right? Like somebody wants to own stock in a company, to have that represented as a token, which could be traded peer to peer, I don't think that's bad, because I in general, I think it's great if somebody wants to own a portion of a company that they believe in and actually be able to not only hold that stock certificate in digital form, but be able to do with it as they please and actually hold it with their own private keys. I think that's a good thing. And I think if somebody wants to give or trade that stock with another individual peer to peer, that's even better than what we have right now, where you have to go through a third party to achieve that. What I don't like is what we've seen from ICOs so far. And those were a bunch of incredibly a lot of them were just scams. Now, of course, I don't think Jack Dorsey is a big proponent of scammy ICOs. But I do see a lot of the tokens being created, basically all of them, other than if it's an actual security where you own part of a company, as completely needless. So we need to go over and look at Coinlist just to get an idea of what's there. So Coinlist, here we go, where the best digital asset companies manage their token sales. So already I'm not super excited about that. So these are some of the tokens that have launched. I haven't looked through all of these. I looked at a couple that kind of raised some eyebrows for myself. So let's see some of the companies that have been on here. Open source public blockchain solving the biggest issues of Bitcoin and Ethereum. Kind of vague, okay. A scalable, secure, and decentralized digital currency and transaction platform. Decentralized. Is it? If there's a company there that's raising money, to me that's not decentralized. Ocean, a decentralized data exchange protocol to unlock data for AI. The problem with these is if you're saying you're a protocol but you're also raising money, there's a centralized structure at play there. Trust token, create asset-backed tokens that you can easily buy and sell around the world. So why is there a token involved in creating other tokens? I don't know. Origin, the blockchain platform for building decentralized marketplaces. So a blockchain in which you can build decentralized marketplaces on top. I don't. Again, like, okay, for that instance, building decentralized marketplaces on top of a blockchain. So what is decentralized about it? First of all, again, if there's a centralized structure raising money, why is that decentralized? And secondly, if you're building a platform on top of this potentially already centralized platform, why do you need to do that? Like, we've already gotten, so Lightning Network is going to enable atomic swaps where you can trustlessly trade. If you want to have alternative currencies, you can trade back and forth between each other. Liquid is launching things where you can actually have securities on a side chain of Bitcoin, and you can do atomic swaps via the Lightning Network or just within Liquid itself, without the need for another platform. Yeah, I don't know. Again, Filecoin, a decentralized storage network powered by a blockchain and a native token. Why do you need a native token for this? It could just be, if you're paying for file storage, decentralized, you could have a file fragmented across the network and be paying for that storage space in sats via the Lightning Network if you like. So I don't know. I don't see it. None of these ideas here, and just from initial scrutiny of their sound bites on their promos here, don't sound particularly promising to me. And I wonder why each of these needs to have a token sale in the first place, unless it's a security in the company, in which case, if it's a company, then it's not decentralized. So I don't know. It runs in circles. And it seems like if you're decentralized, how are you raising money? Why do you need a blockchain? Why do you need a token? It's just, I don't know. You see what I'm saying? Let me know. You take a look. You let me know if you think any of these have legitimate use cases. From initial scrutiny, I don't see it. Anyways, I will say I'm not super excited that Jack Dorsey is involved with this. That said, it's his own money. He can do whatever the fuck he wants. So, whatever. Anyways, I'm going to wrap it up there. Sorry if it was kind of rambly at the end there, but when I'm parsing through stuff like that, I need to kind of just talk it through in my head and go, why, no? Or why, yes, which doesn't happen a lot. Anyways, I'm going to wrap it up there. Thank you guys so much for watching. It's great to be back again. If you are new here or if you've been around for a while, like, subscribe, share, of course, share, get new eyeballs on this video. If you want to support the show in another way, you can hit up either the sponsors, Ledn, Nord, both those links down below. And of course, hit up Wasabi Wallet. Get some privacy going on your Bitcoin. And finally, if you really like what you saw, you can hit me up with a tipin.me tip via the Lightning Network. And with that, I am out. Have a wonderful rest of your evening, and I will see you tomorrow for your daily session.